So topic for today, convincing your CEO and CFO to invest drastically more in supply chain. I will share a bit where I'm really puzzled with what has been going on, and where for me we are not necessarily taking the consequences of what happened the last 2 years. And I'm puzzled why CEOs or CFOs are not more actively investing in supply chain. And I want to share some of my ideas and also some tips and tricks I believe you can use to engage in a different type of debate with your CEO and CFO. Before we dig into the content, there is a prize to win for you today. So you will see throughout the presentation that there's a couple of QR codes. And so this session today is really like a helicopter view. We will, I think, touch really on a broad range of topics. And wherever you're interested to dig into more detail, you will see QR codes, which you can basically scan. And to encourage you to follow those QR codes and to do the scanning, the person who, let's say, follows up the most on the content underneath it will win 2 books. So the person who clicks through and follows through on the content will receive a copy of the 2 books I've written. The first one, Supply Chain Strategy and Financial Metrics. The second one, The Strategy-Driven Supply Chain. So a slight encouragement to really be focused and try to absorb as much as you can here from this webinar. As I already said, I started by being puzzled. And I think primarily like the last 3 to 6 months. And one of the reasons is the following: like for quite some time now, I've been talking about the supply chain triangle, and that supply chain is about balancing service, cost, and cash. And on the one hand, if we look at the last 2 years, let me ask you. So if you help me a bit to gather insights from you, I have a couple of Mentimeter questions. So if on the browser you go to menti.com and you use this code, or just using your mobile phone, you go to menti.com and you use this code, give me some insights on what you have encountered. So more tension in the triangle: service, cost, cash, worst service levels. There's a broad range here. So in general we had, but there are some degrees you could see. Supply costs for sure. So raw materials, logistics costs. Inventory positions is a bit spread, and we've been also, in general, we've been quite short on capacity. If I switch back to my previous presentations, I did a comparable exercise on a conference a couple of months ago. I think at that conference, people were even a bit more extreme in the issues that we experienced. And okay, so if supply chain is about balancing that triangle, I think over the last 2 years, the pressure in that triangle has been very severe. And then as companies, what has been our response? What do you think I've seen most? Is it more like despair and, oh my gosh, how are we going to solve this? Or was it more resolvedness and yes, we can? I would say in general, I've seen a lot of companies which basically were in panic. And I think the issues that they were confronted with in that triangle were way bigger than the issues they had experienced over the last 5 to 10 years. And let's say reacting to that was more like in a reactive mode than in a firefighting mode, rather than I have seen a lot of executive teams which which seem to have a good grip on this and seem to know how to handle this. And so another Mentimeter question just to explore a bit. Which of the following do you think I have witnessed over the last year? So which ones do you think I have witnessed? Yeah, well, basically I have seen all of these over the last year. And again, this was from previous exercise, so maybe different companies have been in different positions, but if you look across the board, let us say the picture I've seen is not necessarily beautiful. I would say it was rather ugly from a supply chain perspective. And it's a pity because I would say like maybe 1 year ago or 1.5 years ago, when we were hit by COVID, I thought, okay, this is the moment for supply chain. Why? Because it will become ever more clear for CEOs and CFOs and investors and for a board of directors that, yeah, if the supply chain is not functioning, there is no business. And I said, well, COVID, yeah, more clearly shows the value of supply chain. If I add to that the drive to be more sustainable, well, if you want to be more sustainable, supply chain is also one of the key enablers of that. If you add digitalization, like, yeah, digitalization is about using information in a better way. And here again, supply chain is about information management. So I had high hopes, like, okay, this is a giant wave and it's up to us as supply chain people to capture it. But over the last 3 to 6 months, I'm really more concerned, like, yeah, but are we capturing the wave, or are we just hit by a tsunami and are we buried somewhere deep under the water, right? Are we on top of the wave, or are we somewhere beneath the wave, so to speak? And why is the reason I am puzzled? Let me ask you 3 questions once more. If your CEO or CFO were to choose between 3 options, how would he or she prioritize? So would he or she rather invest in a new ERP system, invest in additional production capacity, or invest in an advanced supply chain planning system? What would CEOs and CFOs prioritize? So give me your insights or your votes on how you see this. Okay, so what we say is, yeah, first priority, invest in additional production capacity. Second priority, invest in a new ERP system. Third priority, invest in an advanced supply chain planning system. It's in line with what I would see. And maybe depending on your capacity situation, the ERP would go first and the capacity would go second. But across companies, I see much more willingness with CEOs and CFOs to invest in production capacity or a new ERP. Investing in an advanced supply chain planning system, my feeling is they don't really get why this would be needed. They don't really understand. And what they don't understand, they are also quite reluctant to invest in. Which one of these 3 do you believe is the largest investment? So, yeah, which one basically is the most expensive? Is it the production capacity? Is it the new ERP? Is it the advanced supply chain planning system? Which one is the most expensive? Yep, you seem to be hesitating. But again, I think this result is quite in line with what I see. Also, what I see what an ERP system costs or an advanced planning system costs, and what investments in production capacity cost. The investment in production capacity can be very sector specific, but in general, the first 2 will be more expensive than the third. Then third question, yeah, which one of these three do you believe has the most impact on restoring a healthy balance between service, cost, and cash? So if we want to improve service and cost and cash, which one of the three has the biggest impact? Yeah. And this is also in line with what I would have expected. Like, yeah, so if you are really short on capacity, if your demand is 150 and you can supply only 100, then additional production capacity, yeah, might be needed to restore the balance in the triangle. But yeah, as long as the capacity is not there, yeah, having a good planning system will help you to better balance. Then as the capacity comes up to speed, you also need to anticipate on, you know, what extra demand you can take along. So in any case, that supply chain planning system is key. And I would say this is where I'm still puzzled, because again, if I look at it at the last 2 years, at the COVID period and the post-COVID period, and what is now happening with Russia and Ukraine, and so the disruptions in that supply chain triangle have never been bigger, right? And the reaction I have seen in companies is really, it's improvisation, right? So yeah, we've been using a lot of Excel trying to stitch stuff together, which is very noble as a cause, but it doesn't give me a very professional image, right? And also, if we look at CEOs and CFOs, well, they'd rather invest in a new ERP or extra capacity than investing in a new planning system, while at the same time, yeah, a supply chain, I often say a planning system, yeah, costs 1/10 of an ERP system. And when you look at the business benefits, it's the other way around. So a planning system probably has 10 times more benefits than a new ERP, because in a new ERP, you are most probably doing the same stuff as before. And maybe you have some more visibility, but yeah, what's the business case of creating more visibility? A planning system really touches the service, the cost, and the inventory position. So there you are really at the heart of the triangle. So it's like the CEO and the CFO prefer to spend money on something which is 10 times as expensive and has only 1/10 of the benefits. Yeah? And there I'm confused. I say, hey, what did we do wrong? Yeah, supply chain has been a big issue for all companies last year, and still our CEOs and CFOs prefer to spend 10 times as much money on something which has only 1/10 of the benefit. So we can blame CEOs and CFOs, but most probably also we as supply chain people are missing something, right? And we will include the votes of you in the presentation, but you can see again, this is from a previous session. It's quite comparable. And when I see these results, I'm confused. We're doing something wrong. So yeah, so how can we then get our CEO and CFO to invest in supply chain, and to invest in supply chain planning systems, and to invest in planning people and in planning processes? Well, if you want your CEO and CFO to invest in supply chain, then don't talk about supply chain. Yeah, that's an important piece of advice. Why? The moment you talk about supply chain, it's like they get an allergic reaction. They think it's going to be very technical, and they don't necessarily like stuff which is too technical. So instead of talking about supply chain, we need to talk about other stuff. Yeah, and what is stuff we can talk about to them? Yeah, first step is simple, like show them the money, right? So if you want to improve supply chain, and show them the money, yeah, and how can we show them the money? Well, we often use that supply chain triangle of service, cost, and cash. Or if you position it a bit more broadly, it's not just the working capital or the cash which goes into the working capital. It's also the cash which goes into the fixed assets. It's the capex which goes into capacities, into plants, into distribution centers, whatever you own. That's the capital employed. And so when when companies come to me and they say, hey, we want to improve our S&OP, I often ask like, do you have issues with the service? Yeah. Oh, no, the service is good. What about the cost? Well, we are a high margin business, so cost is not really an issue. What about inventories? We are family owned, so inventory is not an issue. I said, but if you don't have issues, then maybe you don't need S&OP, right? So again, don't start with S&OP or don't start with supply chain. Start with the business challenges and the business problems. And we do this type of workshops with the full executive team. So sales is there, finance is there, even HR is there, because if there's a lot of pressure, also HR is concerned that we will be burning out people. Or if we say no, we need to get to better systems and processes, and that might have an impact on the capabilities of people. HR has a real interest in what is going on in this triangle and what we need to do to solve it. So my first recommendation is, again, don't start with supply chain, but start, for instance, with this triangle and do a workshop cross-functional involving sales, involving finance, involving the CEO, and say, okay, what are the issues we are facing today? If you don't have issues, it will be very hard to pull off supply chain improvements. And it's tricky because that triangle is simple enough that everybody understands. Yeah. So sometimes supply chain people are afraid and say, yeah, but if I do this workshop or exercise, will it work? It always works, right? Everybody relates to the triangle, and it's quite easy to have a good discussion on what are the key issues we are facing today. And what is very subtle is that once everybody has the same understanding of what are the key issues, it kind of automatically creates a buy-in to, okay, but if these are the key issues, what are we going to do to solve them? Yeah? And then a better planning system or a better S&OP process can be ways to get some of these issues tackled. Yeah? And it will also paint a broader picture, because if you say, okay, there's a shortage of labor, you're not going to solve that with a supply chain project, right? So that might really be an HR question over here. So also doing this type of triangle exercise will show, okay, where can supply chain planning or supply chain improvements help, but also what is the broader picture like? Yeah, we need more CapEx to make our plants more flexible, just as an example. And so service cost and cash or capital employed. So the service is the driver for the top line, the sales and the cost get to the bottom line, the margin. And in the end, it's about, okay, yeah, we want to improve the margin over the capital employed, or in financial terms, the return on capital employed. So please follow those QR codes, because all of the topics we briefly touch upon here are then explained in more detail. And in this case, it's a sample chapter from one of the two books here. And so show them the money. Well, if we know where we are struggling with service, we should be able to link it to the top line, either to sales in units or sales prices, margins we can generate. The costs should, the sales and the costs should link into the bottom line. And we should also look at capital employed, like inventories, yeah, or maybe we can postpone CapEx because we can then better utilize our existing assets. But through that triangle, you can make a quite explicit links to financial metrics. And this is another tool we use here. Is like, okay, what could this bring? Yeah? Well, we have here kind of a business case template where we just fill in the financials from a company. And then together with the company, we start analyzing, okay, where do we think the improvement could be? Maybe if I improve my service level with 4%, I expect that 4% service level improvement will translate into 2% top line improvement. And because half of the things I cannot immediately deliver are currently lost sales. That's just an example. So we come up with templates and we help you to identify, okay, in our specific situation, where could the benefits be? Yeah. And this is how to trigger the interest of a CEO or a CFO. It's so don't start with supply chain or S&OP or planning systems. No, start with showing them the money. Quick question. And do you think the full executive team is aligned on what needs to be done? So is the triangle in balance? And is the full executive team aligned on what needs to be done? Let's see some. For the balance, we seem to be to the left when it's about the executive team. Some people say, yeah, we are quite well aligned on the executive team. Same time, there's also still a lot of people who say, no, we're not aligned in the executive team. And I think my recommendation is really start there. If the triangle is fully balanced, it may be very hard to pull off supply chain improvement. So that we are at the left, again, it's a window of opportunity. Yeah? So we should, as a supply chain community, we should act now because the imbalance is here and now. Yeah? And now we have the burning platform and the interest. But it's very important that we make sure it's not just a supply chain game. No, it is not just a supply chain game. It's really a game of the full executive team. And doing that type of workshop around that triangle, that's really one of the most successful recipes I have seen to create that broader awareness and to create that common ambition to start changing stuff. Second way to engage the CEO and the CFO, it's about making the link to strategy. And so what we have developed there, and again, this is described in the 2 books and in more detail in the 2nd book. But we have developed ways to reveal your strategic profile. And how do we do that? We give you a set of 22 statements, and we ask people to select 5. And strategy is about making choices. So what does that mean? If I get 22 statements and I can select only 5, I really need to decide which statements are more or less reflecting my business or my business unit. And yeah, these are examples of real life companies. So again, if I say I want to be a total solution player, which basically means that I typically have a broad product range and I have a lot of services tied around that broad product range because I assemble it into a total solution for my customer. That would be a customer intimacy player. What could be a product leader? Well, a product leader quite often plays on product quality. And in this case, the product quality is somewhat linked to assortment. When it's B2C, quite often a product leader is all about best product quality, but also creating the right experience around that. And when you do this type of exercise, it's very important that the strategic profile is clear. That's one. And also that different people in the company are aligned, because if R&D thinks we are a product leader, and sales thinks we are customer intimacy, and operations thinks we are operational excellence, that's not going to work. I often say to executive teams, if it's not clear to you what the positioning is, how should it be clear to the customer? Or how should it be clear to maybe the thousands of people working in your organization? And if you don't make a clear choice, you risk being stuck in the middle. Plus, if you don't make a clear choice, I cannot design the supply chain. And so we have exercises to bring that up. And this is an example of a conflicting positioning. So it's a very well-known brand in consumer goods. It's a food company. And this is really going in all directions. So this is an issue. You can't design supply chains or supply chain processes for this type of conflicting positioning. And this is another example. So it's not obvious, but it's something that is needed to design the supply chain. It's also something that CEOs, CFOs, salespeople like this. It's also important on the executive level to talk about strategy and to make strategic choices. And so you've all seen this, so it's important to make choices. Again, more details are in the books. So we describe what the typical dimensions of value propositions can be. And strategy literature says, okay, you can dominate on one dimension, you can differentiate on a second, and for the rest you need to play at par, right? So you can choose one on which to dominate, a second on which to differentiate, and for the rest you will need to play at par. And in the book we also link this strategy model to the strategy model of Tracy and Biersema. So if you want to know more, follow one of the links, for instance, also the first chapter of the book. Let me again switch to the Mentimeter in here. Do you think the strategic positioning of your company is clear? And do you think that the full executive team is aligned on the priorities? So give me your votes. I have a question here from Andy in the meantime, like what exactly are the criteria for determining that the triangle is in balance so that the executive understands and accepts? In 90% of the cases, Andy, when I do the exercise, that the triangle is not in balance. And so that the executive understands and accepts. I've never had, every time I did that type of workshop, I never had to convince anybody. It's like when you do the exercise, automatically as a result, people understand where the challenges are, and it's kind of automatically accepted. Like and I've probably done it like for 20 or 30 times the last 2 to 3 years. And yeah, I can also not really explain why it then looks that obvious, but I would almost say try it and keep me posted on what your experiences are. So I see quite some differences here. Some people say it's not clear. Some people say it's very clear. So very different views from different companies here. But in general, yeah, are we willing to take the consequences? Yeah? And are we fully aligned on how that translates into priorities? We seem to be less certain there. Yeah, and just a quick recap of what are we doing as Solventure. So originally we really come from the S&OP and IBP space. So implementing S&OP processes and systems and combining software and people, integrating it with ERP systems, and having a strong methodology on how to drive these improvements. And this is certainly where the core of our business is. And also, if you want to know a bit more about our S&OP vision, I won't go into detail, but there's another white paper or vision paper you can download here, and which describes our S&OP vision really in detail. And I would say almost in the past, we came like bottom up from the supply chain, and then we tried to improve the S&OP, and sometimes we succeeded and sometimes we didn't, because sales wasn't interested or because finance didn't trust the S&OP process, and for sure still wanted to have its own financial planning and forecasting process. And I would almost say, yeah, the best way is to combine the bottom up and the top down. And so to make sure that people understand how this will contribute to financial value generation in the company, and also to help people understand why this type of processes is needed to realize the strategy. And so the system we use is Arkiva, but certainly going forward, we can also help you without necessarily implementing the Arkiva software. So if you would already have a software, you can still talk to us and we can still work with you. And making the link to strategy here, or the link between strategy and S&OP, don't get lost in the details here, but commercial people are fond of value propositions and strategy, and they say, no, but we know who we want to be, right? So we really want to have the best quality product, and our customers buy from us because we have the best product and because we create a certain experience around that. And once that is clear, that's the moment you as supply chain can say, hey, but then we need to agree on something, because if we are driven by innovation, the two of us know that if we launch 10 new products, out of the 10, 5 to 6, will really not be a success. It will be more like failures. Out of the 10 new products, 2 or 3 will be like this, right? It's not really good, and it's also not really bad. And out of the 10, there may be one product which is a huge success. So if this is what we know, we need to be able to capture that. So when we look at demand planning, we need to think through what are possible demand scenarios. And when we look at supply planning, we need to make sure that we have a lot of upward and downward volume flexibility. Products which are not going well, we should avoid to have leftover stocks, right? And products which go extremely well, we need to be able to scale up as fast as possible. So we can better connect with salespeople starting from the strategy when it's about demand planning or supply planning. Also to finance, we could say to finance, hey, but there's a lot of uncertainty here on the demand. So what do we want? Do we want to work with minimal inventories? Or do we want to be able to follow quickly? And for which type of products or product lines do we really want to have that scalability built into the supply chain? So if you start from the strategy and the strategy realization, it becomes easier to ask, otherwise quite difficult questions. And I've been with companies which say, no, we want to deliver a total solution. I say, hey, that's fine. But if you want to deliver a total solution, you will always have a complex portfolio, because delivering that total solution creates portfolio complexity. And if we will have a complex portfolio, when it's about inventory planning here, maybe we need to think through make to stock or make to order. Or when we buy stuff from the external side, right, we need to think through what the impact of MOQs could be. And we might need to have a strong portfolio management process, because if we don't control the complexity of the portfolio, we will simply be killed by the complexity. And if total solution is the strategy, we will have a broad portfolio. That's not the question. The question is, how will we as supply chain support delivering that in the best possible way? And what's the type of collaboration we need with a sales organization or a product management organization to do that in a proper way? And if you start on the strategic level, you get to a different type of debate. And here, this is more a process type of view, but also your systems should support that, because I don't see a lot of planning systems which provide a very good support for portfolio management. Well, if you are in this box, you'd better have something. You don't want to run it with Excel, because it's really crucial to realizing your strategy in a good way. Let me switch. Would your executive team currently be aware of the impact of strategic choices on supply chain planning? So to supply chain or supply chain planning, would your executive team make the connection? Do they understand the connection? Do they connect the dots, so to speak? In my experience, they often don't. And and maybe sometimes they intellectually still understand, but when they need to start putting in time, like sales, or when they need to start putting in money, like finance, CapEx, to improve the planning systems, or when they need to start investing in people and OpEx to drive this process in a better way. So I'm not sure, maybe it's in the front of their head, so they intellectually understand, but when they need to put the money on the table, it's like it disappears. I'm not sure where it would then go in the brain. Okay, time check. Need to speed up a little bit. So if we want to reserve our seat at the executive table, like one joker in Dutch. Left is, I think it's the whole sustainability piece. We talked about that financial triangle, but as I'm reading myself into the sustainability domain, instead of one triangle, basically as supply chain, we will need to start managing 3 triangles. Sustainability is about the triple bottom line. So it's not just about a financial triangle, but we also have a people triangle and we also have a planet triangle. Because we use financial capital employed, and that's the return on financial capital employed. But we also have human capital, human capital on which we can incur certain costs, stress, pressure, child labor, right? And there is also a certain utility we can provide to people in the people triangle. And we also have a planet capital, or eco capital, like we utilize land, we utilize water, we utilize air. There are certain costs, and there's also a certain value which we can bring or draw from that. And one of the books I read was talking about offshoring in the 80s as an example. And they said, well, why did we start offshoring in the 80s? Primarily because of the lower labor cost. And the cost difference in the labor was so big that all of a sudden we could start offering our product in European or US markets at much lower prices, because the cost difference was so big. And because we could offer it at much lower prices, our product, we could offer it to the mass markets. And because we could offer it to the mass markets, sales was really exploding. And because we were offshoring, maybe we had a bit more inventory, but in general, because labor was so cheap, we didn't do a lot of automation. So the capex in the East was much lower than the capex in the plant in Europe or in the US. So we started here. On the people side, it created a lot of jobs in Southeast Asia. So in that sense, it helped to reduce poverty in a lot of countries there. But it increased unemployment in the US or in Europe, and that increased unemployment, increased poverty, increased crime, and increased alienation. So if we look at the people triangle, it's already less clear what the net impact would be. And if you look at the planet triangle, for sure, because we offshored everything, it has been very negative for the CO2. So the kilometers over water and over land have increased dramatically. And as we shifted production into countries with less environmental control, also from a pollution perspective, it was probably not very positive. So and if 2 steps back, I would say we already had a huge struggle over the last 2 years just with that financial triangle. That's what we talked about. But there's a whole new challenge coming up, which is that sustainability triangle, which is parallel chess. So we need to play chess on 3 chessboards at the same time. And where do you think the sustainability agenda would fit best? So who should be in the lead for sustainability? Let me first ask you. We are with the supply chain audience, so I'll tell you where I currently see it. So I currently see that sustainability is often driven from investor relations. And companies also tell me that, but our investors, like big pension funds, are asking us for our sustainability agenda. And if we don't have a sustainability agenda, they are no longer willing to invest in our company and provide money. So there is a clear pressure on companies coming in from the investor relations side. And if I look at who has the biggest contribution to metrics like CO2, it's product management, it's the design, it's the R&D, and it's then the operation. So where should it reside? If I would need to choose, then for me, sustainability should either reside with R&D or with the supply chain, because R&D, when we design the product, we decide what to buy externally and what CO2 to buy, right? But we also typically already have made some kind of choices on how to manufacture something. And certainly when I combine it with supply chain, I don't have studies on that, but if you design the product and you design the supply chain, most probably you have already 90 or 95% of the CO2 footprint. So where I think historically it was more with finance. One of these two functions need to stand up, and maybe that's a big opportunity to combine and bring closer product design and supply chain anyway, because it doesn't just have an impact on CO2, it also has an impact on costs. Right? So if I design my product for supply chain and for modularity, my supply chain costs and my supply chain inventory will be much lower as well. So I would even hope that maybe the two functions come a bit closer together. And for me, the ownership of sustainability should then somewhere reside over there. And so am I now back here in my presentation? So this was from the conference. And so what's your envisioned future of supply chain? Like, do you want to be on the left or do you want to be on the right? If I look at the last 2 years, my feeling was that many supply chain people were rather on the right. And yeah, we love to firefight, because if we had a full week of firefighting, it's like we live and we have contributed. But yeah, maybe we should stop being that flexible as supply chain. And if we want to increase our impact, we will need to engage with the CEO and the CFO in a different way. And how can we do that? Okay, remember, show them the money. How can we show them the money? Well, start from that supply chain triangle and then link that supply chain triangle to financial impact. And also link this to strategy and strategy realization. So yeah, but how do we want to stand out in the market? Yeah, what is really our value proposition, our strategic value proposition? And once we've understood that, then make clear how we are going to do that and what we need from which type of functions to support that and to realize that. Yeah? And also as supply chain people, we will need to stand up and more firmly pronounce and stress that. And yeah, if I combine that with the whole sustainability challenge, so we've been playing on one chessboard and we will need to add to others. I think there's a big opportunity once more for supply chain people to increase their impact and to increase their influence and to increase their role, but we will also need to stand up. I think we are basically at the end. For the people who still have a couple of minutes, we can still take one or two questions. So you can drop your questions in the question box. I see two more questions here from Andy, like the executive's awareness of strategic choices is the crucial question. Are you a strategy consultant? I would say, yeah, we are a strategy consultant who understands operational impact. There's a lot of strategy consultants who are very bright in strategy, but have no clue on how it hits the operations. Yeah? And I think that's the big difference we bring. We more come from that operational background. So if you allow us to do a strategy workshop with the executive team, I think we can even be tougher on the strategic choices that are required, because we understand how some of these choices translate in the back end and into the operations. Another question here, sustainability is not a clear metric. It seems to be a political tool. CO2 is not everything. Almost by accident, I just had a call before this, and it's a startup company who wants to measure, I would say, the different dimensions of sustainability. And I would agree, the current focus is very narrow. It's like CO2, and it could be scope 1 to 3 emissions, but sustainability is much broader than that. And I see many companies who have a sustainability agenda, but they don't necessarily know what they want to measure and how they want to measure and whether they really would like to report it. So I would say that there are high hopes and high ambitions, but it's still very underdeveloped on what are we going to measure. And if we measure something, whether it's on the planet side or the people side, what are the compromises we are willing to make on the financial side? And a lot of companies are still exploring there. And don't hesitate to reach out to us to follow up on any of the topics here that we've discussed. So I would say thank you all for attending, and we hope to see you back at one of our next webinars.